So before you enter any invoices under suppliers or your AP workbench, what you need to do is set the view up so that you can remove the columns that you no longer need, certainly around the tax. So to do that, you come to view, go to columns, come down to tax, and we have several values here that we just don't need. So we need to remove the tax classification. Now I know a lot of people think, well, hang on a minute, how do we choose the tax codes? We use a tax classification on AR. We do not use it in AP at all. So you have to remove this one. This is will actually cause issues if you keep this one selected. So remove the tax classification. We also need to remove the withholding tax group unless you have withholding tax. So for this particular setup, we don't need withholding tax. I'm actually going to remove it for now. However, if you have a business unit that actually requires withholding tax, you can keep this one checked. We want to keep the ship to location. That's actually really important. The reason why we need that is if you're buying something from a supplier and that supplier ships the product to a different country, the chances are they're actually going to calculate a different tax rate. So we're currently using a UK entity, and if we were to buy from a UK supplier, then we would expect a domestic tax rate such as GB VAT standard at 20% to be calculated. However, if we were actually buying a product and our supplier sent it to France, France is in Europe, and therefore when that supplier calculates the tax, they're going to base it on the ship to location. The ship to location is in Europe, and therefore they're going to charge a 0 rate. So the ship to location is actually very important. The ship from location generally isn't used. The reason why we don't necessarily use the ship from location is because in most cases we don't know where your supplier is going to ship the goods from. If we have that information, then great, but generally we hide this. So a supplier could actually ship the products from a third party, or they could ship it from a warehouse in a different country, and they may route it through their own entity, but ultimately the ship from is likely not to be known. So by default, we normally turn this value off. Location of final discharge. This is primarily used if you're buying something, but you're going to ship the product on. So say we're in the UK, we're buying from a UK supplier, the product is being shipped to our location in the UK, however, we are actually going to then ship that product on to Norway, and Norway are not in the European Union, so therefore the location of final discharge being Norway would mean that the actual tax should be out of scope. It's an export tax. So that could actually be used. So even though the actual physical ship to is in the UK, we can use the location of final discharge. Now by default, we turn this off. So unless we've told you to actually turn this on, keep this one turned off. Transaction business category is not needed. Intended use should really only be used for US tax setup. Unfortunately, you can't set values up under intended use that are country specific. So generally any values you set up are available to all. So by selecting a value under intended use for say some French configuration means that when the US look at the intended use, and they do need intended use, then you'll actually see the French values as well. Product physical classification is not needed. However, the user-defined physical classification is needed. This is actually the primary driver for overriding any of the tax information. So this is actually one of your key values. The product type is your split between goods and services, and this is also essential for tax determination, so we definitely need this. Product category is actually used to identify whether or not the items you're buying have a classification against them. This is not often used, so by default we'll be turning this off, and it's actually linked to non-inventory purchasing categories. So at the moment, unless we tell you otherwise, turn this one off. So for assessable value, we turn this one off because it's not really needed. So the last one here is a tax control amount. We don't need that either because we actually drive the tax control amount from the header, and I'll show you that now. So we're going to deselect it from the line, and if we go up to the header, and you'll see here we've got show more, we click on this one, and then we go to the tab that says tax, click on that, and then we have a control amount. So we can actually put the tax control amount in this field here, which will help drive the correct tax. So the way that works is that if an invoice came in and the total amount was for $119.99, The line amount was for 100. By default, Oracle would calculate the 20% if 20% was the correct tax to calculate. So therefore, it would calculate a tax line of 20. If we were then to try and save that, there'd be a distribution variance and it would go into error. So by putting a tax control amount in of 1999, so for example, you put in 1999, that would then prorate the difference across the invoice, and the penny difference would then be adjusted from the tax, and the calculated tax would also then show 1999. If you have multiple lines, it will actually prorate the difference across all of those lines. So 5 lines, and if there was a 3 pence difference overall, then you would have 3 of the lines would be adjusted by 1 pence, and then the other 2 lines would be ignored. So that's how it works. But we don't want that in this particular invoice. So, right, so that is how you need to set up the tax for AP invoice lines. All you want to see is the ship to location, user defined physical classification, and the product type. Just those 3, no more.